Hello, everyone. Welcome back to the Switch Markets community. I'm Shane Vernier, and today is our Switch Markets live webinar series. We're going to talk Forex and Futures. I'm going to show you exactly how you can trade currencies using futures accounts, and also I'm going to show you where to find the Forex accounts and which ones maybe you should be focused on and which ones you should be avoiding during this very tumultuous time, I would say, in economic history. Right now, we don't know what the global economy's future holds. A lot of us are very optimistic. A lot of us aren't. There's reasons for all of it, but there's a lot going on right now, and I think that when we do look at all the different ways that we can trade, it's important to have a lot of different weapons in our arsenal. You have to be able to think about commodities, and you got to be able to think about currencies. Today, we're going to talk Forex. We're going to talk about Forex futures and what exactly those contracts are and maybe different ways you can attack the markets using some of the most popular futures contracts in the world, which are our CME FX futures. I'm going to show you where to find those, which ones maybe you should target. I'm going to talk a little bit about the margin requirements involved and why Forex trading and some OTC markets is superior to futures, and then how futures has some advantages over the OTC markets. So there really is a lot there. I've got a trader question that I want to answer that was asked to me. I'm going to lead off the live stream with that. I want to dive into the question because it's a good one. And if you guys have any questions at all, be sure to ask just in the live chat. I'm running like 2 live chats, so if I get behind, I'm going to check in periodically, so just give me a little bit of patience there. But good to see you. Yes, sir. Always a pleasure. Yes, sir. Andrea Garwal. All right. Good to see you, Andrea. Welcome. Lita, good to see you. Bobby Bob, always a pleasure, guys. I had a pretty good trading week. This week's been a pretty good trading week, and what I mean by that is there's been great trades. There's been some really good trades. Yesterday, we scalped that 65 level on the U.S. oil. I was very skeptical about how price action unwound for us just when we were watching, but it looks like 65 could potentially be the top of this thing for a while. So that was a pretty good, darn good trade. We've also got another one that we need to highlight here before we move on. This is going to be your U.S. dollar Japanese yen. U.S. dollar Japanese yen 920 crossover swing trade. Remember this from our swing trading workshop on Tuesday. Absolutely fantastic trade. Right now it's ticking higher, higher, higher. The real question you would have to have if you're an active trader and you're looking at this saying, okay, what should I do right now? Well, you could see that our market has blown in our direction big time in the last 2 days. So right now, according to the trade that we set up, we're up about $1,430. We risked an initial $1,500. We've got a profit target up there right around $1,550 or so. A couple of things you could do. Number one, you could dial this in directly to a 1-to-1 if you wanted. Go right there, right around 1508, whatever that may be. Nothing can ever prepare you for the last part of a trade. Nothing can ever prepare you for it because it's really difficult. It can be a big, big challenge when we're looking at this and saying, okay, what should we be thinking about as we roll towards the finish line? Are we going to get there? Yeah, I mean, it looks to me like we're going to get there. There's no real reason to jump out of the market. Should we jump out of the market? I don't know, not necessarily. Can I afford to give back $1,400 that I've already made and potentially take a loss if this market reverses? Absolutely not. If you're in this trade, here's what I'm going to do. And I stressed the other day about you need to take profits. You need to stick in there if you're a swing trader and make sure that you get paid off. You need to make sure of it. You also need to be smart. Core PCE price index coming up tomorrow could reverse this market. If it reverses it, you're going to give back all of your gains and then potentially take a loss. So in my view at this juncture, you have a couple of different options. The first option is what a lot of traders do. They go ahead and they move their trade up to break even and say, okay, it's a risk-free trade now. A lot of traders also will go with maybe a trailing stop, maybe put that stop loss beneath today's low, something like that. We could certainly do that type of a motif. It's one of those things that you've got to be able to get your head around what you need to do to stay a solid trader. You can't just dive in and out of positions saying, okay, I'm just going to dodge into this one and out of this one, and we made a few bucks and we're going to go on to the next one. You can't do that because eventually the chickens will come home to roost. Pardon the cliche. Call the cliche police. And you're going to get in on one of these and it's going to reverse and come out and knock you out. So what am I advising to do here? Honestly, you're up about what, $1,435. Am I really going to sit around and stress about the last $70 of this? Hell no. Take the money. Couple reasons why we took the money. Number one, why? We were almost to the finish line. Okay, almost. All right. PCE coming up tomorrow. Anything can happen in this pair. I really want to stress that. When you get a big move, we got a big 2-candle move, feel pretty good about it. Unless we were shooting for maybe like one of those 1 to 3, 1 to 4s, something that's really going to make maybe our quarter, then I think that you take the money and you move on. That's my opinion. That's what I've built a career on doing. That's why one of the reasons I'm still in the markets. I'm not a seven-figure Johnny like most people on YouTube. Everybody's seven figures and big private jets and new cars. That's not me. I'm a blue-collar trader. That's the way I am. That's the way I was built, and that's how I was taught to survive. But I really did like the mechanics of that trade. I was skeptical at first. We saw that pullback, and then we just got once those market drivers came, it really blew things in our direction, and that's fantastic. So one last one I want to look at here. I know there's a lot of action on the Euro USD. Let's go ahead and take a look at the Euro USD. Now, this is on my basic, the way that I like to look at the markets with the Fibonacci retracements and also my Bollinger Bands and my moving averages. Okay, what we have here is a big-time two-day dump. It's the exact opposite of what we just saw in that Japanese yen. Okay, so what have we seen here? We talked a lot about the dollar weakness last week. We talked a lot about how that rate cut had to be baked into the cake. And remember, we don't move in straight lines. Markets don't move in straight lines. When you see something go way down, it's going to come up. When you see something go way up, it's going to come down. That's just the way it is. It's only a degree of how far we get the retracement. So when I'm looking at something like this Euro USD, I said, yeah, that's about par for the course. We knew the dollar was going to do something. It's still weak. I don't care what anybody says. It's still weak. 98.50, still very weak on the DXY. So what do we have going? Well, we've got sort of a Euro USD that's coming off big. A lot of folks really want to be long. A lot of folks really want to be short. If you're a short-term trader, you're probably on the short side of this market. That's great. This market dynamic on the weekly chart is absolutely terrible. It's abhorrent, to use a giant word. It really is bad. I mean, go back to that week of July 28th. You're traded largely inside of that thing since July. So that's August, September. September's almost in the books. So 2 months inside of one weekly range. That's unheard of. That's unheard of. So right now we're going absolutely sideways. If you were looking for potentially a bid, I would much rather bid this market, but you can see right there, there's your weekly hammer, and you're coming off big this week. You're off almost, negative 0.67, 0.68. Not the biggest loss in the world, but we are trending right now. So you're low down there, EMA 13-week EMA 11650. That's a pretty darn good support zone. I would not be afraid to pull the trigger maybe on a long from there, just because the broader market condition is in deep rotation. So you want to think about that. That's absolutely huge, and we need to understand what we're trying to do here. Remember, Euro USD, probably one of the most common traded in the world. Pretty good support zone right there. I would be looking at that closely. One last thing we want to check is back off to our monthly. Do we have any way to trade the monthlies right now? For me, I'm not impressed at all. I like the compression here. This is still sort of a P pattern. We went right up. What's the high there? 119.18. I still like 120, basically at the top side. But how could we buy a Fibonacci retracement level? It's really touchy. I don't believe that you're going to be able to, at least not until the next month opens. But right here, you're talking about like a 2-month range. Very choppy, guys. Very compressed here on the Euro USD. I still have a bullish bias. Here, but this retracement could be very, very deep. I think you could probably scalp 116.50s maybe for 25 pips and probably call it good. I would be in pure scalping mode, though, right now. I don't know about taking a position on the Euro USD either to the long or to the short. If we get a deeper pullback, we'll talk about taking those longs. That's for sure. Let me see. Let's see. Tina Jean, good to see you. Tina, welcome. Remember, I'm dialing in like in 3 different chats here, so if I get a little behind or I miss one of your questions, I will be sure to get right on it. Okay, guys, welcome to the Switch Markets community. If you need a broker, check out Switch. They got zero commission accounts. You've got all sorts of things, tight spreads, thousands of markets. We're going to cover the Forex markets today. As far as why you should head on over, well, won some awards. Best MT5 broker global, also best trading experience out of Asia, and best partnership program out of Mania. So interesting awards. I think that I've talked to the back office. They're very excited about the future of Switch Markets. Head on over, check it out. Fast payouts. We've got a reverse KYC program that could potentially get you up and trading before you pass the KYC and are actually approved for an account. I believe those limits are up to $2,500 just to get you up and running as quick as possible. Okay, here's a trader question. Now, I got this one earlier, and I promised I would answer it right away because it's a good one, and I get it a lot. And believe me, the trader that sent in this question, I absolutely appreciate it. We will keep you anonymous, but your question is a good one, and it's one that I've received an awful lot over the years. So let's go ahead and have a look. Okay, I need help on this. I'm a good Forex trader with solid skills, but my biggest challenge is trading psychology. Most of the time, emotions, rush decisions, and a lack of discipline end up hurting my profits. I'm reaching out to you to ask for your advice or recommendations on things that can help me improve in this area. It's a fantastic question. It's a great question. So what does it mean? Well, it means a lot, guys. It means something different to everyone. And when we start talking about Looks like we're glitching out. That's fantastic. When we start talking about exactly, what these things mean, what we believe is going to happen, and what will happen in the markets, a lot of it depends on us. So I guess what I'm saying is, a long story short, we're not. Now all of a sudden my internet's glitching out. I'm going to lose you. Unbelievable. It's been great all day. Let's see. 1 second. All right, I'm back. Looks like right now we're having a little bit of a technical difficulty. We're not getting enough juice with our output. So we're going to do the best we can, but this is going to be glitchy. My audio will probably come through, but the visuals won't be any good. Okay, so in any case, back to the question. Okay, I need help. I'm a trader with solid skills, but I'm finding my psychology is getting in my way. The best thing that you can do, the absolute best thing that you can do for your psychology is to get experience. Get experience. Get as much screen time as you can. There's no quick fix for your psychology. You're not going to be able to just come in there and say, okay, I am psychologically ready to stop over trading, to stop taking profits too soon. That's not going to work. You're going to have to be more patient. You're going to have to put the time in. We talked about Malcolm Gladwell's 10,000 hours. I don't think it'll take you 10,000 hours to really be a proficient trader, probably to be a master trader. But what you've got to do is you've got to be able to be patient with yourself, to understand that you're going to make mistakes. And the key is this: when you lose, learn everything you possibly can from your losses. Was your loss a product of bad analysis? Was your loss a product of a news event? Was your loss a product of just not being patient? Those are absolutely huge things. You need to really focus on that and understand why you take each and every loss. And if you do that, you get the most out of your losses. We learn by losing. That's the way I was taught. They say, hey, listen, my uncle, my mentor in the market sat me down and said, you learn by losing. I want you taking trades. I want you winning trades. I want you losing trades. But here's what I don't want. I don't want you to make the same mistakes over and over and over again. And if you find yourself over trading each and every day, then you got a problem. Then you need to figure it out, or else you won't be around. I won't bankroll you. I will fire you. And that basically is it. What you have to do is make sure that you do not make the same mistakes over and over and over again. If you can do that, you will find the psychology gets cleared up immediately. Now, the other thing about psychology is this: your leverage, your margins, your risk management has to be there. It has to be intact. If it's not intact, you're going to run into real problems. You've got to be dialed in, 1 to 3% of your account. Stop loss located, profit target located, good solid entry. If you have those three things, your psychology shouldn't be an issue. You should just simply let them play out, let the trades play out. Easier said than done. It comes with experience. Don't rush yourself. Give yourself time. You need time to develop as a trader. Don't panic. Don't be too hard on yourself, but study each and every loss you take. That will pay dividends in the future. Okay, I got another couple other questions here. Let me see. Tina, I was recommended to read a book called Trading in the Zone. I ordered one, literally just arrived today. Yeah, Trading in the Zone by Mark Douglas. That's classic. That's one of those trades that's one of those books that I have, and I have it on my shelf back there. I've read it. Do it. Read the book. Work through the worksheets in there. It's good stuff. Shane, do you own switch markets? No, I don't own switch markets. I'm not a broker. I don't own switch markets. No. Good. I wish I did. I don't. Let me see. Universal. Hi, Shane. What about yesterday's gold trade? 38% Fibonacci, hour 4, 32.25 level. The direction was right. Price respected that area. In the bull, I guess, 200 pips. Yeah, I mean, the big problem with that trade, Universal, was being able to stick with it. I mean, it did trade down immediately beneath 37.25. But that zone held up fantastic. I mean, if you actually took that and held it, you banged it. It was actually fantastic. 37.39 right now. It's a great trade. That's what we were looking for. Really difficult because it got very, very volatile towards the end of yesterday's session, and it really was a problem for us. If you were a short-term scalper looking for maybe that $4 or $5 payoff, you probably took a loss on that one, or maybe a break-even trade. That's for sure. Let me see. Journaling's supposed to be good. Yeah, the journaling in that book is fantastic, Tina. Yeah, we're going to actually release a trading journal too. Let me see. To the trader, let me see. Yes, sir. To the trader dealing with usual problems all trader have, I would advise know the days you do well and only trade those days. Absolutely. If you have good risk management, you should be okay. Don't rush your trades. That's right out of my playbook. Yes, sir. It's all about knowing when to trade. You know, for me, Monday's game plan. Tuesday, Wednesday, Thursday, pedal to the metal. I'm running into the red. Friday, I'm gearing down. I'm preserving what I made in the last several days. It's all about momentum. Know when you trade the best. I trade the best on Tuesday, Wednesday, Thursday. No question. No question. Let me see. And the one last one. Just get in your trades, and that's it. Most of the time, I just walk away. Staring at the charts creates all sorts of problems. Trust yourself and trust your strategy 100%. Absolutely 100%. There you have it. All right, guys. Well, let's go ahead and get on with the show here. We do have a little bit of a workshop here, live webinar. I wanted to answer that question, though, because that's a good one. We had some trade updates here. The dollar CAD is going to be one that we could look at right there. Really, the key level. We're starting to break towards that zone. I love this. If this market gets overextended, we're going to be in great shape. So I love the rebound of the U.S. dollar. If we go up and test that 140 zone, we're going to have a fantastic opportunity, potentially, to get a little bit of money. So I like that one. I like that a lot. The other trade update is going to be dollar CAD, Kiwi CAD. You can see we're starting to close in on that. We're right down there. The back end of that golden zone is going to be our buy, and right there is going to be your bid, right around 80.19. That's going to be pretty good stuff. So I'm interested in that zone. We are right on the doorstep. Maybe we missed entry 80.29. I believe we were buying 26s. So if we missed it, we missed it, but that's okay. I think we're going to come down and give us an opportunity there potentially to trade that. So that's exactly what I wanted to cover there on the trader update. Let me see you. John Gasho. Thank you, sir, for the encouragement. Still learning and grasping. John from Kenya. Absolutely. Absolutely, John. You're welcome. There's lots of reasons for encouragement. I'll give you another couple of nuggets here towards the end of the session, that's for sure. What about the Naked Forex Trading Strategy book? It's best for naked systems. Universal, I haven't read it. That's a good one. I mean, any books you guys feel like are fantastic, put them in the live chat. The Naked Forex Trading Strategy. Interesting. Naked Forex Trading. I'll take a look at it. You're in the right place, John. All right. Here we go. Trade update. We got that. Those two trades are coming our way as far as what to look at for this week. It's all about Thursday was a big one. BOJ minutes, S&B interest rate decision, durable goods. Tomorrow's the PCE price index. News of the day, the S&B kept rates flat. That's absolutely huge. The S&B kept rates flat. I sort of expected a cut. I really did. I thought that the S&B was going to screw with everybody and cut rates into negative territory. They did not. So that's basically what we've got rolling there. As far as core durable goods preliminary figure came in a little bit better than expected at 0.4%. As far as durable goods orders, 2.9% over negative 0.3 expected. That's a big gainer. Those are big gains. So you got the big home sales numbers, new home sales numbers yesterday. You got solid durable goods today. And then all of a sudden you're thinking, wow, economic prowess isn't too bad. The stocks are selling off a bit, but that has to do with the dollar on the rally. I wouldn't really correlate these economic events with your stocks sort of being weaker over the past 24 to 36 hours. But interesting stuff. Existing home sales came in better than expected, even though it was down month over month, still outperformed expectations. So we got an interesting dynamic working here when it comes to consumption and economic prowess. And that's very, very important that we understand the difference between consumer confidence and growth compared to what? Compared to stagnation and no consumption. If you don't have consumption, the economy can't grow. At least the U.S. economy can't grow. All right, what else did we have? GDP Q2 got revised up again to 3.8% over 3.3 expected. That's a staggering figure, guys. I was calling for negative Q2 GDP. Boy, was I wrong. We're almost at 4%. That's absolutely huge. All right, so let's go ahead and get started with our webinar now. Lots to go over here. I will take any and all questions, that's for sure. That's what these webinars are for. Let me see. Universal, yeah, naked. Let me see. Got a couple comments here. Yes, sir. I actually enjoyed the naked trading quite a lot, especially with the key levels. Universal, yeah, it really helped me with everything. And you guys too helped me. I learned from you guys. Hats off. Well, that's what we tried to do here. It's a PDF available for free on Google. I will check out that. I've never heard that naked trading. I've heard of the naked trading strategy. I just haven't heard of those tutorials. Dave F19, good to see you, Dave. Welcome. All right, guys. So one more market here, two more markets, and then we're going to go ahead and move on. And I'm going to show you where to find your Forex pairs and also where to find your futures contracts that you can trade Forex with. And if you have any other questions, guys, this is a live webinar. Ask me anything you want. Literally, that's what I'm here for. All right, Great Britain Pound USD right here. I know a lot of you are trading the Great Britain Pound USD right now. I broke this down yesterday, but it's really important that we don't ignore our macros, our monthly sort of our macro levels. Sort of a spike low there to a spike high. That pullback zone right there is absolutely critical that you know where that is. 131.46. So right around 131.50. What's the EMA? 13-month EMA at 131.34. That's huge. That is absolutely huge. That zone right around 131.50-ish is going to be a big dog. So be ready. Be ready for that if it comes our way. That's a potential bid and probably, 1 to 3% trade. That's probably a 3%er, a buy to the top side. Be ready. Be ready. Be watching your inbox here over at How to Trade. If you're a member and you've clicked on my picture and you're following me, you're going to get those trade ideas dropped directly into your inbox. So this one probably is coming out later today. I want to see where we close today, but I would like to put this one out ahead of PCE because I think it's going to be a pretty good level. Great opportunity there in the Great Britain Pound, though. Facing a macro level, potentially. We're still a little ways off it, though. We're about 170 pips off of it, but we could make that up easy. We just got to wait and see what happens over the next few days. That's a good one, though. I really like that one a lot. One last one over on your MT5 platform. I'm going to go ahead and open this one up. This is a key. This is absolutely key. What you have here is you've got the Swiss franc. Now, remember, the Swissy came out. We thought we were going to get a move out of the Swissy. We did get a move out of the Swissy. The U.S. dollar is moving against the Swissy. Why? Because the Swiss National Bank sort of held firm, and the dollar's on the march anyways today. Daily chart. Here's a real nice trend line. I could have started the trend line up here. I don't really think that it matters. You could do it if you wanted to. What really matters is these peaks. This is an according to Hoyle downtrend. Boom, there's peak 1. Peak 2, there's that third touch we talk about a lot with trend lines, went right up there and then got the big reversal and then came off, and now we're trending back up towards our trend line. So if we're interested in potentially taking a short, would we short that trend line? 80.18? Probably. That would probably be an area where you could take a short here on that U.S. dollar Swiss franc. Now, one of the ways that I would try to confirm the validity of this formation is to actually try to draw a Fibonacci retracement sequence from a longer time frame than the daily. The problem that we have is we just don't have anything that's very good. We really don't. I mean, I could draw right up from here to down here, but the Fibonacci's are going to be way up there, so it's not even really worth doing. I would focus right here on this daily. This trend line right here, believe it or not, you can dial it in exact if you'd like. Put it absolutely perfect and whatever you want to do. What I would say, though, is right around probably that 15 to 80 and a quarter area. That's going to be your resistance zone. And the way that you would trade this is you would put in your limit order right up here, wherever you want it, or you could wait and just go with a market order, and then you could sell. You could sell right up there and then stop yourself out when you break probably, I would say, or get a bullish close above the trend line. You're probably going to stop yourself out there. This may not be a bad swing trade for this dollar Swissy. So definitely be looking at that one. I think that's a fantastic opportunity to trade a trend line. Typically, trend lines work. They really do. I mean, right? Look at what you had right here. You had two touches here. That third touch, I mean, that was the sell, and you had that right in order. If you wanted to draw your trend line from up here, you certainly could. I mean, I don't really have a problem with it if you want to go ahead and give it a look. Just to me, I think it's just redundant. I don't believe that you have to do that. You're going to go right up here to your trend line. And be forewarned, MT5 is a little bit touchy. I mean, you can see, it's not necessarily the best platform in the world for analytics, but it is pretty good for order entry. So let's say you were going to draw something like that. You'll notice how it's removed from your peaks a little bit. You need to make sure that you connect those peaks, even if you have to cut that top off. So I would focus here, here, and here, and my sell would be somewhere between 80.15 and 80 and a quarter. Absolutely love that trade. I think it's going to be a pretty good one. We're going to be watching that one closely. All right, guys, let's talk a little bit about Forex, and let's talk a little bit about futures. So a Forex pair, essentially, is just going to be a spot market exchange rate. That's essentially what it is. It's an over-the-counter market designed and fueled by people like Switch, big institutional players, whatever. The idea there is very simple. The idea is that we're going to make exchanges. We're going to exchange one currency for another, and we're going to profit from the difference. Now, or the difference is always moving. We're going to profit from the movement of the exchange rate up or down. But it's pitting one currency against another, and that is the basis for your Forex trade and your basis for currency trading. Now, currency trading has been around forever. It's been around back in the days of John Maynard Keynes when he would sit there and do foreign currency arbitrage in his head at night before he went to sleep, where he would take, he would take Swiss francs and he would go into drachmas and then lira and then to dollars and then to pounds. And somehow by the end of all those exchanges, he had more money than what he started with. That was the sort of what made Forex trading famous, was the idea that you could arbitrage your way into some money. And it's like, well, I'm going to go ahead and buy francs right now, and I'm going to hold them. And when they appreciate, I'm going to go ahead and get back into dollars, and then I'm going to make the profit from it. Well, in the old days, it was a little bit, it was more difficult to do for sure. I believe that the margins were better because there weren't as many people doing it. So like if you were the merchant of Venice, or if you were a traveler, let's say you went on a trip like I did last week and you went from Dillon, Montana to Thessaloniki, Greece. Well, let's say you did that and I had an inside track and I said, well, the euro is going to do this. I'm just going to take my dollars and then I'm going to get more euro for my dollars. Then I'm going to cash my euro out for more dollars. Well, it didn't quite work like that, but that would be the idea. So the travelers, the merchants, the traders, when they traveled the world, they were doing the currency exchange. Now it's all in front of us. It's all electronic. So that is the crux of the Forex. You're working with independent dealers and independent brokers in an over-the-counter market, an OTC market. Now, it's absolutely huge that you understand the difference between an OTC and an exchange market. I'm going to show you the exchange in a minute. So just for your Forex pairs here, you go to the front page of Switch Markets, and you go right there under Markets and go ahead and take a look. In Forex trading, it's going to have everything you need here. Now, one of the big differences, and we're going to circle back around, is the leverage that you can get in the OTC exchanges, or the OTC marketplace. The leverages that you're going to be able to get is going to be a lot bigger than on the futures markets. And I'm going to show you that in just a second. So what is Forex trading? I just basically told you what it is. You can go 24 hours a day and all that jazz. The beauty of this is you can trade anything, anytime. And I think a lot of us really like that. As far as what the biggest differences are between Forex and futures, one of the biggest one is called the spread. Now, the spread in Forex is the bid-ask price. It's the difference between that. Oftentimes, it can be as low as a fraction of a pip, but a lot of times it could be a few pips or a lot of pips depending on what exactly you're trading. So if you're trading an exotic currency pair, you're probably going to have a great big spread. And if you're trading like the Euro USD, you're going to have a little tiny spread. Just remember, that spread you have to overcome before you start making money. Now, one of the biggest benefits of futures over Forex pairs is that you have an opportunity to trade without a spread. And that's sort of interesting as well. So, okay, so you've got all these pairs, right? You've got the Aussie CAD, Aussie Swissy, Aussie Yen, all these things. You've got an incredible amount of diversity. Euro, South African Rand. You can trade literally anything in the world. Great Britain Pound, South African Rand, Great Britain Pound, Singapore Dollar. There are really infinite. And I mean, there's thousands of these things, hundreds of these currency pairs. You can trade them all on the Forex. In the futures contracts, you can't trade very many of them. Limited to pretty much the G10. All right, let's show you where to find the futures contracts. Okay, so what we're going to be focused on here is the CME Group. This is the largest futures exchange in the world. This is out of Chicago, Illinois. That's where the original CME, the Chicago Mercantile Exchange, was. Basically, the CME over the years has consolidated all the other exchanges here in the United States. Not all. They haven't bought the Intercontinental Exchange or ICE yet, but I'm sure that it's coming at some point. The consolidation of the futures markets has been pretty much the story in derivatives trading over the past 20 years, 15 years. So what we have here is we've got the CME. They've also bought the COMEX. I don't even remember what that is. The COMEX. But you also have the NYMEX, the New York Mercantile Exchange. Those were the big dogs, and they all got consolidated. Now, the CBOE, the Chicago Board of Options Exchange, that's still an independent entity, but the CME basically consists of the big groups, the CME, the Chicago Mercantile Exchange, the New York Mercantile Exchange, and the COMEX, which I don't even remember the abbreviation for the COMEX, to be honest. I think it's like Commodities Exchange, I believe. In any case, you trade gold on the COMEX. That's why I bring it up. So you got the CME Group website right here, just cmegroup.com. Plug it in and go ahead and click on Markets. Now what you're going to do here is you're going to go to your Markets home. So you've got Featured Products or Browse By. Just click on Browse By, and you're going to go right down there to FX. Give FX a click, and it's going to bring up your Forex options. It's going to bring up your Forex markets, FX futures and options. We're not going to talk options just yet. I mean, it's very, very difficult unless you're an options trader. And I've been around and around with options, done a lot of work with options, and it could be a challenge. So We'll get to options eventually. I've been saying that for years, but we'll get to it eventually. So what do you have here? You have all of these different products. You got all these different products. So let's go ahead and give products a click. Explore our FX products. You've got the G10. What are the G10 currencies? Those are the big dogs. Those are the ones where you're going to find the most liquidity. You also have emerging markets like the Mexican peso, Brazilian real, South African rand futures. Those are the ones where you're going to see tremendous volatility. Okay, let's go ahead and give the G10. Let's go ahead and give the G10 a click and see exactly what the list looks like. Okay, so here's your product guide. You've got all of these different contracts. The majors, essentially, the Euro USD is going to be represented by the 6E. All right, the 6E is going to be what? Your Euro FX futures, your Japanese Yen USD. Now, one thing that you need to be aware of is when you're trading these, when you're trading futures, all right, what happens? Sometimes they invert the pairs. So when you look at the Euro USD chart, you're going to see it exactly as the Euro USD spot pair. But when you pull like a Japanese yen, we all trade dollar yen on the Forex. It's all USD JPY. You're going to see the inverted action of that on your JPY USD because that's the way that they drew the contract up. Great Britain pound USD will be the same. Australian dollar USD will be the same, 6A. Canadian dollar USD, 6C. All right, and then you've got the Swissy there, CHF USD. Remember, that's inverted. Typically, we're trading dollar CAD, dollar Swissy, so the pricing is going to be backwards. Don't let that fool you. It's going to be very, very similar. It's like looking at an inverted chart. You just got to be there mentally. So NZD USD, and then you've also got I don't know what the CNH is. Anybody know? CNH? I don't know. In any case, there's a lot of options here, but not as nearly as many as on the Forex market. So if we were going to go to, let's pick one out and just sort of show you exactly what to look for when we talk about one of these contracts, a few of the things that you really need to know. Let's go ahead and just go to Euro FX Futures. Let's go ahead and give that a click. Okay, so the Euro FX Futures and options. The futures, there's your code right there, 6EZ5, so you're already trading the December contract. This is absolutely key that you understand how to read a quote board if you're going to trade futures. Now, Euro FX futures, we know our symbol 6E. All right. Now, you'll notice the volumes over here. Always have to pay attention to traded volumes if you're looking at the futures contracts. Now, right here, you got sort of 1,600 for October, 5,700 for November, December, 154, 796. That's where all the volume is. That volume means that's the front month contract. So if you're going to trade a futures contract, if you're going to trade this Euro USD on the futures market, you're looking for 6E. And what else are you looking for? That December contract, because that is where the volume is. That's where the volume is. If you're trading one of these, you can still trade it. Just understand that you're not going to be able to get in and out of the market because the liquidity is not where it needs to be. The liquidity right here is fantastic. So you've got right there the December contract. And we're going to go ahead and pull a chart here in just a second. I'm going to show you how to do it on TradingView. And you can see that these contracts go way, way out there all the way to June 2028. There just isn't any volume there. Like, for instance, somebody traded a March 2027 futures. Look at that. Look at the price, too, 120.11. So they're either betting that 120.11 is going to be the top or the bottom. Interesting stuff. Somebody did it. I didn't do it. You didn't do it. Somebody did it. But there you go. So that's key. Understand that about volume when it comes to futures contracts. Okay, let's get out to price action and pull one of these charts up. So if I wanted to get a Euro FX futures on my chart, on my trading view, what am I going to do? 6E. We're going to go ahead and hit the drop down. We just identified where the action is. It's on the December contract. That's where all the volume is. Go ahead and give that a push. And there is going to be your contract. That's what it looks like. That's a monthly chart right there, 6EZ. Euro USD looks really close, doesn't it? Very close. What's the difference, though? The prices. Right here, you're trading 117.06, and here you're trading 116.52. The reason why there's a discrepancy there is because we're trading this euro dollar, Euro USD. We're trading it with respect to what we believe it's going to be worth in December at expiration, not what we believe it's worth today. Euro USD, this is what could happen to you like in the Frankfurt airport. When you land in Germany and you've got a big stack of $100 bills, US dollars, and you want to go get euros, they're going to look at the current exchange rate, and then they're going to add on all their stuff, and by the end of it, you've got a very, very different price. This right here, that they're basing their exchange rates on the spot, on what it's trading at right now, whereas right here, this futures contract, we're thinking about what it's going to be trading at in December. That's why we call it futures. We're anticipating what's coming, not what is. absolutely key that we understand that distinction too between the spot and the futures contract. So if I'm going to go ahead and look at this and I'm going to say, okay, Shane, I want to trade it. I'd say, well, I mean, you could trade it. The way that you would trade a futures contract, you can use limit orders and everything. I really prefer a trading dome. This is sort of the way that I prefer to trade futures. And you'll see right here, there's our price. That is price right there. You've got your volume. There's your asks. There's your bids. You got 4 bidders, 52 asks. Those numbers, don't get fooled by those. They don't mean a whole lot. There's algorithms that are spoofing those all the time. I wouldn't fall in love with those at all. I've seen very little correlation between this level 1 market depth. I don't put much stock in that. But you'll notice what do you see right here? You'll see no spread. There's no spread. We're within, a half a pip, something like that. We trade in half a pips. So you've got something like that. Okay, that's great. There's no spread. Go to the Euro USD. Go ahead and pull that up. Let's see if there's a spread. Okay, you see this in here? This area in here? That's the spread. So there's your ask, there's your bid. You'll see prices somewhere in the middle. That's the spread that you're going to have to overcome. That's the difference between futures and Forex. Now, why are there spreads involved? Because they're OTC brokers. Now, here's the big difference between, I showed you a little bit about how they're priced. Here's the big difference between OTC, which is a Forex, something like this. So let's say you're trading with Switch Markets. Switch Markets is a liquidity provider. They're going to take your orders and they're going to place them at the market. At the market, you're going to get buyers and sellers and they're going to debate and that's going to move price. The market itself is a decentralized market full of over-the-counter vendors and liquidity providers. That's what the Forex is. Now, this is much different. We're trading through the CME group. Every single order that comes across the board is going to be assigned a number. And every single one of those numbers, those orders, are going to go through a clearinghouse. They must be certified and ratified before they're legal. So those orders, every single order that we place and trade, every order that we execute, every contract we trade is going to be logged, registered, and cataloged through the exchange. It's going to have to go through the clearinghouse at the end of the day. All those orders are going to be verified. And then what do you got? They're all going into the record. That means that when you're exchange traded, you are guaranteed to see exact volume data. You're going to see, this is delayed data because it's free on the website, but you're going to get real-time market data. Why? Because the exchange, every trade is going to move at a tick up and a tick down. When I buy one and you sell one, when I buy two and you sell one and price moves up a tick, the price is really going to move a tick. It's not going to be within that spread that you see in the OTC markets. Number 2, the volume. When a contract changes hands, if I sell you a contract and you buy a contract from me, those are going through the clearinghouse. They're going through the exchange, the exchange software. Then they go through the clearinghouse. They're locked, loaded, signed, cataloged. It is official. That trade actually happened. Now, in the OTC markets, you don't always see that. You always see maybe bunches of trades and groups of trades that are certified. You don't see that trade-by-trade granularity. That's the big difference between exchange-traded products and OTC markets. OTC markets rely on the liquidity providers to make sure that everything's accurate, data's accurate, pricing's accurate, and everything. With the exchange runs the show. That makes it official. And the exchange is overseen by not the OTC here, but the CFTC, the Commodity Futures Trading Commission. They monitor what goes on at the CME and through the exchanges. And also the SEC does have a role in that, Securities and Exchange Commission. So they're heavily regulated. They're watching. So in many ways, futures markets, exchanges, are more secure than OTC markets just because everything that happens has to go through the exchange. It doesn't just go through liquidity providers. That's very important to see. Now, what is the big advantage of trading OTC over futures? The big one. That right there, financial leverage. This right here too. You can deposit like $50 in a futures account as well. You just won't be able to really trade much. This right here, 1 to 1,000 leverage. So if you're going to go 1 to 1,000, okay. So if you got 1 to 1,000, something like that, 1 divided by 1,000 is going to be what? 0.1%. Okay, so you only have to have 0.1% margin to take a position. That's absolutely huge. That means with a couple $100 you could take a big position. Whereas when you come here, let's take a look at our specs on our Euro FX futures, contract specs. Contract units, 125,000 euros. How about our margins? Let's go down to our margins. They did have margins up here, I promise. Maybe block minimum. Nah, you don't want that. Price limit vendor codes, position limits. Nah, you don't want position limits. In any case, right there, margins. Never mind. It's got its own screen. It used to just be a little drop-down menu. Now it has its own screen. So what's your margin here? Right there. So CME FX, if I'm trading the Euro FX futures, what am I looking at here? 2,900. Interesting. 2,900 per contract. So if I'm going to control 125,000 euros on what, 2.9 or 2,900, I'm right around what, 3%, 4%, something like that. 3%. That's a tremendous difference. That means for me to maintain one of these contracts, I'm looking at about 2,900, something like that. That's a lot bigger. That's a lot bigger than 1 to 1,000. So the biggest advantage that you're going to have trading OTC, like through a switch markets with your Forex pairs, is number one, you're going to have variety, a tremendous more. You're going to have so many more things that you can trade. And then also you're going to have that increased leverage. So the advantages to futures is you're going to have like exact volume data. We're going to know exactly how many contracts are changing hands. And also, you're going to have the ability potentially it's more heavily regulated. So the idea that it's going to be safer, but that's not always the case. Depends on your broker. But the other thing is just real clear pricing and no spreads. So futures, no spreads, heavy regulation, OTC, greater variety of assets, and greater leverage. So really, I mean, the choice is yours on that. That's for sure. Let me see. Tina Jing, 1 to 1,000, even for hold trades overnight. Well, I mean, it depends on, honestly, it's going to depend on who you are, your municipality. I know that the available leverage varies in and outside of the EU. So you're going to have to be aware of your jurisdiction and what leverage is permitted. And as far as your overnight margins are positioned to change anytime at the broker's discretion. So like, let's say you're going to have a big economic event. Let's say you're going to have core PCE or something going like we have tomorrow. The margins could easily be adjusted ahead of that. That's at the broker's discretion. I will say this, typically the available leverage from an OTC broker far outweighs the leverage available on a futures contract. It is very, very small in comparison. Now here in the United States, it's a bit different. The Forex margins are much, much lower than you see here on your screen here, this 1 to 1,000, vastly lower. And that's just sort of the way that they do business with Forex here in the United States. That's, good, bad, or indifferent, whatever. But the variety of products is a big advantage as well. So you definitely want to be talking about that or thinking about that. So to hold trades overnight with 1 to 1,000, you're going to have to talk to your broker about that. I believe if you had enough capital, they would let you probably. But if you didn't have enough capital, they probably are going to limit you on that. Just because the overnight volatility can be very, very stiff. All right. Let's see. Dragon 131. Good to see you. Trading in the Zone is a classic, a must read for any trader. Follow the journal and you will improve your trading psychology. 1,000%, Dragon. Trading in the Zone. I got it. It was one of the first books I ever read on trading. Read it in about, I don't know. I'm not the fastest reader. Probably takes you about a day to read it though. It's not a long read. It's a good book though. It's the legendary Mark Douglas. He was one of the first to put really the psychology of trading into play. So interesting. All right, guys. So that's sort of the difference between the Forex and the futures. If there's any questions at all, I'm more than happy to answer. If not, tomorrow we'll be back with the PCE numbers. I think they're going to be pretty good. I'm interested. I haven't decided yet whether we're going to just trade the aftermath of the PCE or if I'm going to get up early and we're going to trade it live. It might be worth it just to trade the PCE live. We got to wait and see, though. I'm looking at a few things this afternoon, and so on your trading schedule, probably just going to go ahead and go live with the PCE tomorrow morning early and see if we can get a couple trades. But it's been such a good week. I don't like to press it up too much. This is one of those weeks where I would be in no donation mode Friday. We're just looking. We had a solid trade on U.S. oil yesterday that didn't look good early and turned out really good. The Japanese yen trade, the 920 Japanese is great. I really think this Kiwi CAD is going to be good and the dollar CAD. I think those all have potential to be really good trades. So we've just got to wait and see if those levels come into play. You will have a new trade idea out at the end of the day, more than likely on the Great Britain pound US dollar. There's a few things that we can sink our teeth into and attack there. But PCE is the big market mover for tomorrow. So be ready and check your local listings. I guess check inside of the How to Trade trading room for our schedule. I think that I'm on the fence. I mean, usually if I'm going to cover one of those early events, I got to get up early and do it right. So it's about a 4:30 a.m. wake-up call for me. As opposed to a 5:30, but it may be worth doing. Maybe just get up and do that PCE live tomorrow. That might be a lot of fun. Get a little volatility, break down PCE and what we think is going to happen. It could really be fun. That's the market mover for this week, that's for sure. All right, everybody, I'm going to go ahead and sign off. My apologies for the technical difficulties. It looks to me like we're having some sort of server issues, and my stuff looks like it's running well. I mean, my speed tests are good. I run them every morning. I don't know what's going on. It's got to be at the server level, not here. That's the way it is. All right, everybody, I'm going to go ahead and sign off for right now. You guys have a fantastic trading day. If you have any questions at all, be sure to cruise by the How to Trade trading room and send me a private message. I'll be sure to get back to you. As far as what should you trade, Forex or futures, I leave that up to you. It really depends on what you want to do. If you have a small account and you're looking maybe to take positions and you're not too worried about spreads, you probably would be leaning towards an OTC, a Forex market. I mean, it's big, it's liquid, there's tons of options. You've got a chance to really trade with authority there with a small account. Now, if you want maybe bigger accounts and you want to trade, I would say with, I don't know. I mean, it's hard if you want to, I guess, more heavily regulated. And let's say you show up with a lot of money and you want to get in there and make some trades and you don't want to deal with spreads or anything like that. Or if you just have a smaller account and you want to scalp your currencies, just real tight scalps in and out, then you could definitely be looking at futures contracts. There's nothing wrong with that. So 6 of one, half a dozen of the other. You got to figure out what's best for you. All right, everybody, I'm going to go ahead and sign off here for today. Check your, I may change the schedule. We may get up and go. The more I think about it, the more we probably should get up and cover that PCE live tomorrow. I think it could be a pretty good time to be doing that. Should get some volatility. It is the market mover. All right, everybody, until next time, trade the action well, and we'll talk soon. See you.